Peter, a lot of volatility, crude, copper, palm oil prices, currencies, a whole host of issues to talk about. But first, let me start with crude, the mother commodity of it all, the black gold. Where is it? Where is that headed? Is it likely to be sustainable below the 100 mark, you think, or this was just a knee-jerk reaction?
Good afternoon, and I think it's very difficult to probably forecast where it's moving in the short run, quite simply due to the volatility. I got WTI just sitting at over 96. It was a big sell-off last night, big, heavily spanked down. Brent down at $100. So giving up a lot of that hot air, and we did say that you're probably looking at a $90 handle for WTI. I still believe that it's probably got in a range trade. But you've just seen so many other commodities coming under big pressure, and copper was down 3% on the LME, sitting at 73.50. So I think there's probably every chance you go under 7,000 for copper as well.
Right, but what sort of this sell-off is indicating? Is it just indicating a back to normalization of currency in the market, or back to normalization of the money that was printed earlier? What is this trying to indicate?
Well, I think first off, you've got US dollar index sitting at 108. You've got parity as far as the US dollar euro. Who could have imagined it? Putting your mind back 6 months, running at 115, and now here we are at 100, or 1 for 1. Yen coming under massive pressure, rate rises, inflation stories, demand destruction, Main Street hurting with recessionary fears. All of those ingredients go in to create much negative market sentiment. And don't forget what we saw as far as the weakest, one of the worst 6 months in the start of any year for US equities. I think it was actually the worst ever. So that's what we've got. We're running into our second half. This quarter, I think, is going to be extremely volatile, and that'll set us up. We've got earnings starting this week for US equities. So I'm not looking for any, nothing joyous out there.
As far as equity and the earnings you're talking about, but Peter, the question is, where is all of this headed? What would be the culmination of all of this? Because as you pointed out, there are a lot of moving parts. Which do you think is that most important domino factor? Is it the dollar index, which is at 20-year high level?
Well, you can't take your mind off it. I mean, I don't think many traders will really, hand on heart, looking in April and saying we're going to be at a 108 mid-July. I think anyone above 104 was very, very bullish. And here we are, 108, approaching 110. And we haven't been at this sort of uncharted territory for over 2 decades. The only reason because of September 11, when we saw the US dollar index hit 120 or 121. I remember that, those events are black swan events. So we could see that US dollar with Jay Powell's comments and what we're expecting as far as Fed rate rises this month. So yeah, maybe a 110 in over this summer period, maybe even 111. So there's the real issue at the moment.
In financial markets, we usually use the term, or in commodity markets, that markets know about this, and this is something which is already factored in. How much of do you think rate hike, dollar index going higher from here on, slowdown coming in maybe because of what Fed and other central bankers are doing, is factored into a lot of commodity prices?
Well, I think a lot of it is, and as your terminology, baked in. It's already baked in the cake. The uncertainty is you've had such a massive sell-off, and you've still, as far as commodities, but you've still got energy, rattling around that $100 a barrel target. And there is a lot of angst out there, and what impact it's having to Main Street. I know on the streets of India, very, very high oil prices, energy prices, and this is a going concern across the globe. So yeah, that's really stoking the inflation story, the inflation fire. Turkey running at 78% inflation. So yeah, many countries are over 10%, 15, 20%, and it's having a great impact to the man and the woman on the street as far as their purchasing power.
Well, absolutely. The numbers of 54% coming in from Sri Lanka, 70% plus that you talked about in Turkey are definitely something that the street is talking about. But Peter, quickly before we let you go, wanted your take on a couple of other commodities. You touched upon copper, but if you can talk to
Yeah.
us a bit more about Dr. Copper, where is it headed? Is it headed lower? And secondly, the
Well,
Indian markets, as far as the FMCG space is concerned, is quite excited by the palm oil prices slipping by 7% today. What's your take with respect to where that's headed?
first off, we'll look at copper, and I think there's every chance you're going to be sub 7,000 a metric ton for copper. So, no one's any trader out there that's long copper. They'd have to. I'm sure they aren't. They're only the producers. So all the speculators are shorting the market, and everyone that I talk to is saying it's a 67, 68 handle. We'll revise it then. Have a look at the technicals. So you're sitting at $7,350 a metric ton for copper. First part. Second part, yes, big push down as far as palm oil, and a lot of those particular commodities are just being hemorrhaged. I noticed orange juice was down 4.5% as well. So I think they give up a lot of their hot steam, a lot of that movement to the upside, and they just get big selling pressure. I'm seeing as far as Chinese demand for palm oil, and I'm conscious as far as their consumption patterns, but at the moment it just seems to be softer across all of those agricultural commodities, including palm oil.
Right. Thank you so much, sir, for taking our time for us. Always good to get perspective.